Well, good morning, everybody. It's a new face in front of you today as moderator host for the Farm Office Live. I'm Bruce Clevenger, and with me today is Peggy Hall, of course, a veteran of Farm Office Live and our Farm Office team. Welcome here for our January 2024 Farm Office Live. We have a great lineup of topics today. You'll see them on the screen. We're going to challenge you on some goal setting this time of year. Going to have an update on some farm business analysis and benchmarking program that we have, of course, here in Ohio, and grain marketing and some services and some upcoming programming. And we're going to wind things up with some solar development update for here in Ohio. Hopefully your morning was smooth and beautiful and still yet chilly here in the state of Ohio. Of course, we're from the Midwest, so we have to talk about the weather a little bit. So I wanted to share with you our farm office team that we have here at Ohio State. Of course, we have Barry, Peggy, Robert, and Jeff Lewis, many of which are out doing programming today. And so that's why the new face are the maybe unfamiliar standard faces of myself here in the role of moderator today. Other farm office team members that you have heard from in the past, and you'll hear from Clint Schrader today. But we also have Eric Rieger, David Marison, and myself on the team for Farm Office. We have some great speakers, guests today, not unfamiliar to extension programming. But in fact, we have on the agenda today, Dr. Sinki Lee going to be giving us that grain market update here in a few minutes. We also have Eric Romick, who is another field specialist, and his expertise area is energy, specifically today, solar here for the state of Ohio. I'm going to go through some housekeeping things for you today. Slides that are presented today and the recording, those will be shared on our Farm Office Live link or at the Farm Office website. You can get to that after today's presentations as reference for things that we've spoken about. Maybe you have some follow-up questions, or maybe it serves as a reference for you on the subject matter that we're talking about today. Glad to invite you back to those, or share the recording with someone that this topic might work well for them, and invite you to share that link out to those colleagues and friends that you have in agriculture. Questions today as you go through, we go through the topics today. I'll ask you to submit your questions on the Q&A feature at the bottom or side or wherever maybe that feature might live on your screen. The Q&A is for us to recognize that you have that question rather than just a chat comment. So use the Q&A. We'll ask that the presenters answer those questions either live or via chat or via the Q&A feature, and we'll try to get those answered by the end of the presentations today. I look forward to having you participate. It's always exciting for us as presenters to have a few questions along the way, so don't hesitate. Please help us by completing today's evaluation. We continue to get great feedback from all of you about our presentations, the topics that we need to address, things that we need to talk about again, or something new that's on the horizon coming that you'd really like to see our team that we can pull together and address those comments and topics that are useful for you in agriculture and in your circles today. So at the end of the webinar today, as you exit, you'll receive a link to spend a few minutes on that evaluation. Very helpful for us for doing that. The QR code there as well. We'll also share that. It's another way to take a picture of that with your smartphone, and it takes you right to that evaluation piece for the end of the program. Peggy, did I miss anything today?
Well, we've already had a question, Bruce, and that was about the new Corporate Transparency Act, whether we have any resources on that. And so I just put the URL in the chat box for the new law bulletin that we have that explains the reporting requirements under the Corporate Transparency Act.
That's great.
But other than that, no, you did not miss anything, Bruce.
I still have time. So, all right, thanks, Peggy. So to kick things off today, I'm going to take the lead on our first topic, and it really is about that time of year. It's the production and accounting goals. And so farm managers and those in the industry may have a wide range of how they accomplish goals. Maybe some are very formalized, some are written, some are more informal. And so the discussion today is about what can we do in 2024 that will really be in that arena of goal setting. And so I've come across some questions and some situations that farmers have shared with me. And one I'd like to share with you today is a situation that might lead to setting a goal for 2024. Did you have questions about the 2023 farm business not answered by your records? And so there was a bit of a mystery, a bit about, I had a question, but I really didn't have the right records or numbers to answer that question for me. And of course, my bias here is that we're going to be talking about record keeping systems on the production records as well as the accounting records, because those are our numbers and those are ways in which we can learn more about our own business. So that may be one situation that might prompt farmers and farm managers to write a goal for 2024. Another situation would be, did the 2023 farm records actually tell me something that I should not ignore for 2024? Okay, I have the data, I have the results, something presented itself, but does that mean I should write a goal so that I can address what my information about 2023 was telling me? I can do something for 2024. So Bruce, is this a pep talk for the New Year's resolutions? Well, maybe it's a little bit of a pep talk, but it's that time of year. And I think as you have your books open for tax return and you have your books open and you're thinking about 2024, I think it's a good time to be thinking about goal setting for 2024. So farmers have described their record keeping to me kind of on a continuum. And so on the left-hand side, we see here that, record keeping for some can be a point of pride, but sometimes the farmers find themselves that record keeping is a point of frustration. And so how can we resolve that potentially? Maybe farmers describe their record keeping as precise, or maybe it's just close enough. I fill out the necessary forms each year, send them to my lender, I share them with our staff, I do my tax return, close enough. We got money in the bank account, we're good for another year. Okay, so somewhere in the middle there, we might find ourselves. Also, record keeping can be on the side of efficient, as far as I can efficiently enter data into my record keeping system and I can efficiently get reports out. But on the other side of that coin, maybe sometimes we find ourselves having record keeping systems that are a little clumsy. And so that might lead to some record keeping scenarios. So when we look at record keeping, as this session is titled, we take a look at really accounting and then non-accounting. So we're talking about financial and we're also talking about production records. And so you ever go to one of those big retail stores and they've bundled together some things that otherwise we'd buy individually, like 3 bottles of detergent. Okay, they're shrink wrapped together and they have the sticker across there that says, this is a set, do not separate. Well, that analogy to me is sometimes about our 2 record keeping systems that we have on the farm. And so we can't disconnect the 2, because there are times when our accounting system might reveal either an increase or a decrease in revenue, but we have to go back to the production records sometimes to explore the why and why we are seeing that change from the previous year. So keeping them together, but often, we have different record keeping systems on the farm. So what does that equate to maybe making a goal? So one of the things I've already heard this year from phone calls reaching out to me, literally the day back to work from the new year, was, I struggled during tax season to find all my records. How can I get organized? Okay, so potentially a goal there for 2024. What might that look like? Well, one way to get organized or rethink about how we keep records on the farm, at least for accounting, is what does our chart of accounts look like for the previous year, and what might it want to look like for the next year? So a chart of accounts is just a list of how we describe financial transactions. Pretty simple. We all should have some form of a chart of accounts in our accounting system and maybe some things in our inventory system. But the farm manager really has the responsibility, the farm manager and maybe that farm team around the farm has the responsibility to determine what level of detail that chart of account might look like on an annual basis. So what do I mean by level of detail? So in red, you'll notice here on this graphic is 3 levels of detail, also known as or called purpose. And so the purpose would be in red, the first one on the left there, IRS tax return. Okay, we all need to do that. Okay, so that's one level of detail, one purpose for our chart of accounts. But maybe in 2024, you want to go to another level of detail. Maybe that decision making. My example here is simply using the tax line item, fertilizer and lime. But for the farm manager, the decision maker, we may want to know more about specifics in fertilizer. So we build a chart of accounts that allows us to record throughout the year different types of fertilizers, quantities, values, and so on. And that helps us make decisions about that particular fertilizer management. We also then can look at another layer of detail that maybe the farm management team wants to have enterprise analysis. Not that we just have different types of fertilizer, but what crop used that nutrient. So we assign that to our wheat, our corn, our soybean. And so we have a level of detail in our chart of accounts that gives us to that enterprise level. And that can be potentially helpful way to get organized. But where to start, I always recommend folks that are looking for a chart of accounts to align, at least the basic step would be to align the 10 line items on the Schedule F that are income related, and there's roughly about 24 line items on the Schedule F that are expense related to farm operations. That's the basis to start what that chart of accounts could be, should be, and then maybe go to the level of detail that you want for 2024. Another organizing goal might be, what system should I use? We have farms that still buy the OSU farm account books every year, paper and pencil, ledgers, columns, rows, very nice system to keep records. Sometimes those ledgers can then be transferred to a computerized spreadsheet. Shout out to the University of Missouri Extension. They have a really nice spreadsheet, Excel document that you can download. And it does lay out rows and columns and does the math and does some summaries. It's a really good tool if Excel is your favorite. But then there's also some purchase software, Quicken, QuickBooks, and so on. My picture of this farm show, next time you're at a farm show, don't just stop at all the technology and iron and tires type booths. Stop at some of the farm management booths and really learn more about different farm accounting potential software that are out there. Demo it and see if it fits for your farm. So a situation that maybe a financial goal for 2024, the situation was I could not answer my questions from 2024 because my chart of accounts. So the goal would be to establish a chart of accounts to determine, let's say, for example, total variable cost per bushel of soybeans and corn for 2024. Just a simple but yet smart goal, which we'll talk about what a SMART goal is here in just a couple of slides. But what
Hey,
about the product?
Bruce,
Yes,
there is a question. I think we should go ahead and answer it now.
sure.
It's if we have income coming into the current year from last year's crops, how do you prefer to label them as 2023 income enterprise
Yeah,
as compared to 2024?
so it's that income that was received in a calendar year separate from when it was produced. So we sold grain in 2023, but those bushels were actually produced in 2022. So there's an IRS requirement of how we would report that on a cash accounting system. But from a farm management standpoint, what I would recommend, if I could back up a slide, we would have a chart of accounts. Instead of being an expense line for fertilizer and lime, we would have crop sales. We would have crop sales also in that decision maker, but we would then tag that to corn, and then I'd like to tag it as corn 2022 because that was the year that it was produced. So depending on your accounting system, there should be or can be features that allow you to not only assign it a commodity or an enterprise, but you can also assign it a production year. And that's that transition between cash accounting and our ability to pull things together for an accrual adjustment, because agriculture, we behave on an annual basis in a very accrual system. We have prepays in some 1 years, and then we have sales that are occurring the following year. So we have 3 tax years that we're kind of spilling income and expense into and out of each time. So Peggy, thanks for that. I think that was a timely way to answer that question. Hopefully that did answer that question. So let me do a livestock production goal setting. So in this scenario here, I just have really 3 areas of a livestock production area. And so on a livestock system, you might have a maternal side, a paternal side, and then the growth phase, you might say, of that livestock enterprise: cow calf, feeder lambs, farrow to finish type things. And so I'm just going to highlight the growth portion, which would be finishing market lambs, and just identifying here a couple of things that maybe a goal for 2024 would be: I want to know more about my pounds of feed per pound of gain, highlighted in yellow. Maybe more of my average daily gain. Maybe the efficiency things. I'm buying or feeding a lot of feed. It's the number one cost I have as a livestock producer. How can I get more efficient? Because margins are tightening. Okay, these questions might have come about from 2023. Are we able to answer them in 2024? And so the goal might look like goal number 1: determine the average daily gain from wean to market for that market lamb or that market animal. Lambs, that's my enterprise. Okay, another one, a goal production wise, might be determine the actual cost of drying corn at the elevator. Total cost per bushel. There was a lot of bushels harvested this year. And if your corn was anything like other corn in Ohio, it was wet and there was some drying costs. And so do I dry it at the elevator, or do I have a system on the farm that I can dry my own? What's that decision making that I need? And so to determine what needs to reach that goal, we need to know what to measure. And so going in animal ID, so goal number 1, we'd have to know some animal ID and some market weights and some weaning weights and days from wean to market. So there's some great math involved there to make that calculation, but we have to record some things at the farm level. Same thing with the cost of drying corn. We have to review those scale tickets, moisture discounts, and being able to separate out the gross from the net on that check of that commodity that we've grown. So I mentioned early SMART goals. SMART goals, probably not a new concept to you all, but if it's a good reminder that goals should be, in this case, SMART: specific to what you need. So they're measurable, so that we're actually measuring an output. They're achievable. It's something that I actually can measure. It's something specific to my farm. It's something I can realistically achieve to reach that goal. It's relevant to your farm operation, information that you need as a farm manager. And then lastly, it's time bound. So in 2024, I want to be able to measure my daily rate of gain for that livestock enterprise. So those are just a reminder on what SMART goals are and how important that can be for determining what you would need for the farm. So with that, kind of wind that part down. Again, my contact information, glad to have folks reach out. Helping you with goal setting for 2024 and other things. So next up on our agenda, we have Clint Schrader. Clint, welcome aboard this morning.
Yeah, Bruce, can you see my screen there?
How's it look, Peggy?
Okay. Well, yeah, that really is a good segue right into my topic. I want to talk and give a little bit of a programmatic update on our farm business analysis and benchmarking program. Record keeping is certainly a large part of that. And Bruce kind of hit several highlights, but I just kind of want to walk through what our program is and what we aim to do real quick. So the first thing is the farm business analysis. We're going to use this to help farms answer, was my farm profitable? I think that's first and foremost, trying to understand our profitability. But then we can go further. What enterprises were profitable? So we look at the whole farm level, but then breaking that down into enterprise, where Bruce was talking about the different charts of account and the different levels. Really breaking that down into each individual crop, maybe the livestock separate from the crops, and then also looking at owned ground, rented ground, maybe some other cropping practices. How did those affect profitability? When we think about cost of production, it's always interesting that we, as farmers, generally talk about our cost of production on a per acre basis, but then we sell bushels. And so, understanding that we can kind of look at that both ways through our program. What was that cost of production on a per acre basis, but then getting down to that per bushel cost, what was our cost there? And then also, ton or hundredweight milk or by head on some of our livestock operations, but, really drilling down to what is my true cost of production. The other thing our program does is we're looking at, how do we compare, compared to previous years, but then also other farms that are maybe out there. We submit our data to the national database that's Finbin, and so that is really a great way to compare yourself on a national basis, but really see what other states have as well. So how is that analysis done? Well, we start off with our balance sheet at the beginning of the calendar year, and then we have a balance sheet at the end of the calendar year. And so those are our bookends. And then in between, we do our cash accounting. So that Schedule F information or those charts of accounts that Bruce talked about, we're going to then use that for kind of the meat of that analysis. And so to do that, again, 2 good balance sheets from the beginning and ending of the year, and then that information that goes in between. From there, we look at our seeds, plants. We allocate those direct costs by crop. Here we can see the detail we're putting in. Our soybean seed treatment, our soybeans that were purchased in 1 year, and then there was a second year where maybe they prepaid. And so we can kind of see and track that through. So whole farm, we're just going to enter in that generic seeds and plants, similar to what we would enter on our Schedule F information as we're doing our taxes, but taking that charts of account, the next step to do this enterprise analysis. We can then look at that and allocate those expenses across each enterprise. And so for this particular example, we have a farm that's growing corn, what they would have, own land versus cash rented, and then they have a couple share rental arrangements. And so we can kind of, again, look at those a little bit differently or separate those out. Then we allocate those overhead expenses. Those seem to be the challenging one for a lot of farms. But as we look at, what are our overhead costs? How do we allocate those to maybe our different components or different parts of the operation? We really sit down and look at those, dividing that out and trying to make sure that we're accurate and attribute all those dollars to the correct part of the operation. From there, the output that a farm would get back is this standard summarized income statement, or the executive summary. So income statement there on the left shows, the gross farm income, then the net farm, just kind of the general cropping acres. But then on the right, if you were with us in November, we talked about Farm Financial Standards Council, kind of how that came to be and the different metrics that they track. But there on the right, we can see some of those different metrics and where this farm is standing currently. And then at the bottom, we have our information accuracy checks. So for farmers to complete an analysis with us and to have that submitted and get back the benchmarking reports and things of that nature, they have to meet some pretty strenuous accuracy checks. And the big one is we can't have a discrepancy over $5,000 or 1%. And so essentially trying to track every dollar that comes in and out of the business down to 1% of that gross revenue or $5,000, whichever's less. So I talked about farm financial standards. Each farm gets this nice graphic. It's got like the trend line that shows where this farm stands, and then the gray bars are where the national average that reports to the FinBin database is. But a nice description. What does that measure? How is it calculated? And then an evaluation scale of were we strong, caution, or vulnerable? So like the red light, green light, green is strong, red is vulnerable, yellow is caution. And so this farm in particular was, over 80. So they're definitely well into that strong category, but general concept of how that works. The other thing a farm is going to get back when they participate is the benchmarking data. And so here I've just got a little excerpt of an old report that we had, but it gives you an idea of the cells being highlighted. So this particular farm had 180 bushels per acre corn yield. So they had their cell highlighted in the 60th percentile. And then roughly you could say 40% of the farms achieved a higher yield. Same with the marketing at 370, they're in the 50th percentile. So 50% of the farms, and you can kind of work on down through that. And so that information is going to be available if we have over 13 matching enterprises. So, if we have wheat on owned acres, if we had 13 farms like that, we could get that enterprise benchmarking report out that would be tailored to that farm. So we publish those and get those back to our farms for them just to kind of make decisions and see what are those areas maybe I need to improve on. Where am I maybe ranked quite a bit lower than some of my other peers. And then I want to shift gears now and talk about our enterprise analysis data. And so, as I mentioned, we are right now working on the 2023 year. We operate a year behind. So the 2024 calendar year is when we're going to be working on the 2023 analysis year. And so as that's just ended, farms are starting to get their balance sheets turned into us, and we're getting to work on that. But the data that I have that I can share most recently is from that 2022 season. And so I realize this is in the past, but I think one of the things that I wanted to share is we always kind of talk about maybe it doesn't pay to be average. We want to be in that top 20%. And so these were farms sorted on net return. So in 2022, growing corn in Ohio on rented ground. And we can kind of see some of the difference between the average of all farms and then that top 20%, a little bit lower on seed cost, $25 or so lower on fertilizer, but a little bit higher on chemical. And then as we go through, we see what those direct and then overhead cost were in our total cost per acre. And so really that gap is pretty significant when we think about our total cost per acre, but then we get down to the bottom and we see that, okay, yield was higher, 16 bushels difference there. And then the value, actually, our average farms marketed corn for 11 cents more per bushel than what our top 20% did. And so if we think back to 2022 or the 2022 crop, I think that's another one of those years where those that didn't have maybe a marketing plan going into harvest maybe came out ahead. And so I think that's maybe a factor there. But then again, getting back to that expenses on a per bushel basis. So that top 20% farm, they were able to produce every bushel for $3.89. And we can see what our net return was per acre. So on those top 20% farms, nearly $450 of net returns per acre. And then there is the labor and management, which is not included in that. That's another calculation that's in our full summary, but I just want to make a note that that's not included in that. When we look at soybeans, very similar story. Again, those direct expenses, there are some differences, but it's really some of the overhead factors that come into play. Equipment cost per acre, I think, is a big part of that. And also, I think we had some farms that maybe had a little bit lower land rent in 2022, maybe in some areas of the state that are not seeing that real high push on cash rental rates that had some really good yields and maybe push them into that top 20% for that year. But as we kind of, again, work through these numbers, we see that the difference was nearly $250 difference per acre between that average group and then that top 20%. Producing soybeans for $7 a bushel and being able to sell them for $13.66. That's going to be definitely a profitable way to farm. I don't think that environment's here to stay, unfortunately, as we kind of start working through some of those 2023 numbers, and it would be interesting to see what 2024 brings. As we kind of, again, track that direct and overhead expenses, really this was the year of the run-up in 2022, where we saw really high prices for fertilizer, especially. I think that was up about 70% in that year from 2021 to 2022, based on our survey work or our data that we've collected. But then when we look at the net returns per acre, this is laying out corn, soybeans, and wheat. So soybeans in red, corn is the gray, wheat is the black bar, and we can see the numbers down there. Really, 2021 and 2022 were just amazing years for profitability for the farms that participate in our program. Wheat being over $100 an acre profit 2 years consecutively was pretty surprising, and I think we won't see that trend continue. But as we kind of look at that, the other thing that I thought was pretty interesting is corn in 2021 and then held on in 2022 to be more profitable than maybe growing soybeans. And that kind of leads me into, as we start work on our 2023 analysis, what are some of these things that we're looking at? Obviously, higher interest rates. I was at a meeting a week or two ago, and farmers were talking about starting their career with 17% interest. And I think about, someone my age or younger, we're considering the interest rate environment we're in now to be high interest because for the bulk of our career we were probably in that 4 or 5 or less range, as we talk about maybe starting the year closer to 7% interest and then ending 2023 8.5 to 9.5% interest on operating money. And so how is that going to impact that calculation on that per acre? What's our interest rate expense going to be? For that reason, I think maybe there's some cash flow decisions that were made. How does that impact things as far as marketing and when marketing was done, maybe to take advantage of avoiding some of that interest? And then will we see wheat maybe sneak back out of some rotations if it doesn't look to be profitable? So those are some things I'm looking at. The other thing, as I alluded to, will soybeans regain that title of the most profitable crop? Our agronomy group did that battle for the belt through the summer, talking about soybeans versus corn. Which one do you plant first? And this kind of comes into the most profitable versus most valuable and the dollars tied up into it. But will soybeans regain that lead and be that profitable crop for Ohio producers? Again, wheat, will that remain profitable? And then again, what impact will marketing strategies have on that top 20% versus our average farm? We think of our forward pricing contracts, those probably paid off huge in 2023 versus what we would consider that store and ignore marketing crowd that's going to grow the crop, put it in the bin, and then sell it as they need cash flow. As we've seen our markets over the last 3 months or so, just not been a lot of great opportunities to maybe make some of those sales, especially on the corn side. And then the other thing that we're tracking, and this is something that's came back in the feedback before, is we think about cover crop economics and regenerative ag, and our water quality team is going to be doing one of the Water Quality Wednesday webinars covering some of that. I believe at the end of the month here, January 31st, I think is the date on that. But, looking at some of the data that's out there from other states, but this is something we want to do in Ohio as well. And as we get farms that are participating in whether it's H2 Ohio or carbon markets, and we can kind of look at how does that income maybe track with how do those farming practices show up as profitable, or what's the profitability of those compared to farms that are maybe operating in a more conventional tillage without cover crops dynamic. And so with that, I'll hand it back over. That's our team there. We've just had a training, and so we've got 15 folks here in the state that are working on analysis, and that we're trying to get farms engaged and want to participate. Certainly reach out if you have any questions, or you have farm clientele, or you're a farmer yourself that would like to participate. We'd love to talk to you. The QR code there takes you right to our website, but farmprofitability.osu.edu, and look forward to working with you.
That's great, Clint. Glad to have you leading the program as program manager of that effort for farm business analysis here and benchmarking here in Ohio. Peggy shared in the chat the link to Farm Profitability website at OSU. Thanks, Peggy, for doing that. So Clint, thanks for building your team here in Ohio and building those farms that we have participating in that program. I get excited about that kind of stuff. I know you do too. We can dive deep and let OSU help farms dive deep with them. It may come across as a struggle. There's barriers. I don't want to do that because my records aren't good enough to put myself out there for analysis. But that's where help's available, and maybe a goal for 2024. So appreciate that. Great. Next up, we have Sin-Kee Lee. Sin-Kee is going to jump on here, share his slides. Sin-Kee is an assistant professor here at Ohio State University in our college, and does a lot of extension work. Sin-Kee teaches academic classes at Ohio State, but also 50%, I think is the right number. Sin-Kee is an extension specialist, and we've utilized Sin-Kee for his work in grain markets and strategies to help growers make informed decisions about grain marketing and across their farm. So welcome, Sin-Kee. Thanks for being here. And I think we're almost ready to go. The snow is getting in the way of the share screen. So there it is. Good morning, Sin-Kee.
Good morning. Yeah, there was some technical glitches, but I think now we are good to start, right?
Great. Thanks, Sin-Kee. Take it away.
Yeah, thanks a lot for having me. It's always like a big excitement to give a talk in front of this nice audience in the farm office. So without further ado, let me start grain marketing update. So this is kind of a chart for the March corn futures. So let me begin with this March corn futures chart. Explaining a little bit of this candle chart. Each candle shows a daily move. When price moves bullish, the candle shows green, typically based on the price when market closes. And when price moves bearish, the candle shows red. Also, when candle shows a long shape, then there is a large price variation on that date. So you can see most candles are red in this chart. Indeed, without a remarkable turnaround, the March corn futures price has been declining after harvest because we got a large corn and there was no particular bullish factor for corn along the time. So basically, the weak fundamentals in corn due to large supply is explaining this trend. But I also want to highlight the the recent price move this week, it was actually the biggest price drop during the past few weeks. What's happened? It was a WASDE day. Last Friday, the corn futures has dropped by around 10 cents. In fact, like other futures price like soybean and wheat also moved bearish after the release of the report. So like today's my talk will be basically like kind of updating what's happened in the WASDE report and how market actually digested this change, and then the consequences actually showing up in the prices. So when you oh, okay, you do not see my, okay, let me click this, share the screen again. So trying to share it. Okay. Okay.
So I think
It
we had
looks
one
good to
comment.
me. Yeah.
Yeah, I think we had one
Okay.
comment that it was full and then another one that it was partial. So I see it full on my screen. So for now, Sinki, let's just have you go ahead. Thank you.
Okay. Let me continue. But thanks for the comments.
Sure.
So yeah, today's topics are like, first, I'm gonna like briefly talk about the January WASDE report. So basically, the WASDE report shocked the market last week. So that's why I want to like start from there. And also like there was another important report, grain stock report. So I want to update the grain stocks information. And also like I want to show a little bit of updates in the export side and Brazilian production side and some like weather factors related to them. And the left figure here, the cash prices in Toledo region. So probably like some of you are like should be familiar with this structure, but because I always use this format. So the black line is basically corn cash price corresponding to the left y-axis, and the red line is corresponding to the soybean cash and corresponding to the right y-axis. So probably like one thing we can see is there was some like rapid price drop, especially after the harvest in corn price, but soybean, it seems it is kind of protecting its fundamentals pretty well. So probably that is kind of giving some hints to us that maybe like there must be some different fundamentals like floating around in the market for these two different commodities. So this is a little bit of a busy table for the corn like supply and demand summary from the WASDE report. There are, of course, there are many things, but like let me just like quickly like summarize a couple of like important things. So basically, this like record level like total production was the main, I think, factor that drives the market, and especially when I just like focus on the on this like December, like the change from December, you can see there has been some minor adjustments in the planted area and harvested area, but basically there has been a big jump in yield, like 2.4 bushels per acre increase in January report. So this was actually the main reason that the production level has gone up by around like 107 million bushels. So this is kind of some like unexpectedly additional supply in the market. So that's why market kind of surprised and then reflected it in the price pretty immediately last Friday. And when you look at the demand side, USD actually has not changed much like compared to the previous month. So overall, we are seeing the supply side has gone up pretty much. Demand side, like not much, but so basically the ending stock is expected to be higher even compared to the previous month, and pretty significantly higher compared to the previous year. So these are all kind of actually determining the market circumstances and territory. So the season average price forecast by USDA is about $4.8 per bushel. And this is again like about 5 cents down compared to the previous month. And this is actually $1.74 lower than the previous year market average price. Giving you a little bit of like additional information when you actually compare the harvest price, like harvest versus planted ratio, it actually has gone up pretty much. But more importantly, I want to highlight this stocks to use ratio, which is kind of indicating the net supply of the market. So basically, this stocks to use ratio can be calculated by dividing the ending stock by total use. So the higher ratio is the larger surplus crops, and that means there will be like more crops left at the end of the marketing year. So basically, if that goes up, that means, okay, maybe supply is kind of the dominating factor in the market and price will go down. That's how we typically interpret this number. And obviously, we are seeing pretty much a big jump in 2023-24 market. Per acre revenue is also expected to go down because mainly the price has gone down. So maybe during the rest of the market year, probably how much demand side can support the corn will be the main factor, but probably there will be another factor that like we want to pay attention to, which is Brazil. The Brazil production and how much corn can be produced by Brazil will be another factor that might affect our export side numbers and eventually our season average price. So let me move on to the soybean side. Pretty much the same structure, but a little bit of different items. Here again, we have pretty much the same story as before, like as in corn. So like planted area, no change compared to the previous month, and harvest area a little bit like down. And then again here, we also see the yield increase. So eventually these kind of came together and increasing the total supply by about 31 million bushels. This is just month-to-month comparison. So even compared to the previous month, we are kind of expecting somewhat additional bushels that we actually kind of underestimated. So it's kind of actually an adjusting process. So eventually this supply increase is expected, but also at the same time, the demand side moved down. So total use is adjusted down a little bit. So basically this is kind of all raising up the excess supply in the market. So eventually the ending stock forecasted to be about 35 million bushels bigger compared to the previous month. And the season average price has gone down to $12.75 per bushel. So those are kind of pretty much the same numbers, I think, just for your information. And kind of I and probably my colleagues like who are doing this like kind of AgEcon analysis, we kind of have some perception that probably it looks like USDA underestimated the harvesting behavior. So they kind of thought, okay, planted area and then maybe X portion of land will be harvested pretty much based on the statistics that we have seen in the past. But this year it looks like farmers found other opportunities and actually decided not to harvest in some area. And then eventually the harvest area was a little bit shrinked compared to their initial expectation, but also at the same time, that really dropped some very low yield land. So eventually, on average, the yield also had to be adjusted up. So that's actually what's happened in January report, and that also quite a bit surprised the market because we didn't expect this additional supply will be realized in the report. Basically, the tight, still compared to corn, the tight ending stock supports the soybean fundamentals, but like how much this can be protected down the road, that will be the question. Okay, let me change gears and move on to the new grain stocks report, which was released last Friday, the same date as the last report. Briefly summarizing it, corn stored in all positions on December 1st, 2023, so like just like at the end of last year, was about 12.2 billion bushels, up 13% from a year ago. In fact, both on-farm and off-farm corn stocks became bigger than last year. The majority of corn stocks are taken by on-farm stocks, which is reported to be 7.85 billion bushels. This is 16% off from an earlier year. Soybean stock level has not changed much, just 1% down, and this kind of reconfirms the strong fundamentals in soybeans. The wheat stock is reported to be 1.41 billion bushels, 8% up from an earlier year. However, it did not affect the market as much as corn because the wheat stock has been so low, and this stock increase is just bringing the stock level back to the historic average. So that is kind of the overview of the quick summary of the grain stocks report. And kind of, I think in this, like at this juncture, I think it is good to connect this stock level to the market fundamentals. So as corn is nowadays the most declining and concerning part, I want to share this. So I put the historical pattern between stocks to use ratio and price of corn. That is shown up in the right figure here. And considering the stocks to use ratio is indicating the net supply, it is not surprising the negative relationship between them. So it's kind of year and year. But one thing that is good to know is there is kind of around in the 10% threshold where the price changes its responsiveness. So if we imagine when the stocks to use ratio goes from below 10% to above 10%, the price might have a high chance of significant drop. Unfortunately, that was the case this year. So you can see, although the recent prices are relatively high, especially in 2022-23 market, this historical pattern like still helps us read the fundamentals, especially like we just jumped from 9.9 to 14.8 price to use ratio, and certainly we are kind of seeing the same pattern following the historical pattern. Okay, now let me talk a little bit about export side. So probably like some of you are familiar with this structure, but let me explain a little bit about like what I did for these figures. So the left figure is basically the accumulated corn export during this marketing year. So we are just passing the second week of the January, but when you look at the trend, it's okay, much better than last year. The blue line is actually 2022-23 marketing year, and the red line is current market year export progress. And it is kind of getting close to the 5-year average. So it is not that bad considering 2020, 21, and 21, 22. These two lines, these markets were pretty exceptional because of the boom by the COVID rebound. So the corn export per se is not that bad, I would say. And also, I think it is when you check the country-specific corn export shift, when you look at this right figure, these are our top 7 corn importers from the U.S. So Mexico take the top, Japan took the second, and those are others. So basically, this is the numbers based on the current week of corn exports. So when you look at this blue dot, that is corresponding to the right y-axis. So Mexico actually has imported about 600 million bushels so far during this marketing year. And when you look at the bar graph, this is kind of indicating the market shift. So compared to the same point of time in the previous marketing year, Mexico actually made some progress. Even they are doing better than last year in terms of importing U.S. corn. So it was actually 26% higher than last year. So in that way, you can actually interpret the changes in corn export shift. And obviously, we are seeing many like good partners are kind of making a good purchases in our corn, except for China. China kind of, I think they imported a lot from Brazil already. And then their corn import and soybean import for U.S. crops are pretty much like lower than the previous year. And overall, but still, it is much better than last year. So at least this is kind of protecting corn fundamentals to some extent, I would say. For soybean side, with the same structure, it is like pretty, like, I think, slow start, or I would say maybe we are struggling a little bit of making a good headway because it is even lower than the 5-year average and all other previous years that we are kind of plotting here. So, still, like, it is a little bit early to conclude like what's gonna be in the soybean side, but based on what USDA says, it is unlikely that we are gonna make very impressive soybean export this year, especially mainly due to the China side. So China, they are actually they imported 35% small this year so far. So this was the main driver of why our soybean export is so much struggling, and probably one of the reasons is probably already like domestic market is paying pretty well to the soybean commodities nowadays. So that's why we are kind of losing an energy to like export as much soybean as before. So that is kind of explaining a little bit of like how this export dynamics is like working, because it is not just one side game, but also our domestic market can affect our export performance. Moving on to the Brazil side, probably nowadays as they are like doing like planting and like entering their growing season, this might be a very important time to think of what they are doing and how that's gonna affect our market. So this is the chart that I generated based on the CONAB, the Brazilian farm like survey data. So when you look at that, like they also update the corn and soybean production like every year, actually every month. But so when you look at this 2024 forecast, December forecast this year, and this is the January forecast. So this is pretty much up to date. And this percentage changes is just compared to the previous year. So in December, they actually anticipated soybean, this triangle is soybean. So soybean production will be 4% higher than the previous marketing year, but they adjusted it down. So now they are expecting about 0%. So pretty much the same amount of soybean will be produced in Brazil this year. For corn, they actually reduced their corn production estimates. So now they are expecting about 11% smaller than the previous market year. So probably it's kind of two reasons. First, they are kind of having some like drying conditions so far. So those drought concern is kind of reflected in these numbers. So they are thinking they're not going to have as much favorable weather as they had in the previous year. And also the other reason that we are seeing this number is, of course, the soybean is kind of paying well in the global market, as you could see in the futures prices and other season average price. So that's why it looks like maybe many Brazilian farmers will just stick to the soybean planting and will not plant as much corn as before. So that's why it's kind of some like decision-making process also resulted in this 11% drop in the corn production. As time is almost over, so let me like quickly summarize like the Brazilian like crop forecast is South American weather. So Argentina and Brazil actually they used to have some bad and drying challenges during the past few like weeks, but like during the recent weeks they are kind of getting some good rainfalls, which is kind of really relieved their stress, and they're kind of now expecting, okay, maybe their production forecast will not be adjusted down anymore. So in my opinion, like I think there will not be a big possibility that Brazilian production estimates get a significant adjustment down the road, considering they now start getting pretty much good, like favorable weather. Probably a potential concern to Brazilian farmers will be the high temperature now. Even with the increased frequency of showers, central and northeast Brazil occasionally see the spike of temperature above 86 Fahrenheit degrees, resulting in a high evaporative losses and high water demand from plants. So there might be one game changer to Brazil production, and to the commodity markets down the road. I have some other comments for other regions, but let me move on to quickly wrap up. So this is another map for the global arable land. So as we see like irregular events more frequently these days, it should be worth reminding ourselves of the global arable land map. Here, the green means the high soil performance and high soil resilience. The red means high soil performance yet low soil resilience. The global territory of soil quality confirms the scarcity of resilient, high-performing land. This implies grain marketing strategies leveraging the resilience of U.S. crops can be more pronounced going forward. So as a closing remark, I usually like summarize what I said during the presentation, but here like I just want to like ask some other like type of questions. So looking ahead for next season, we know that agriculture has a lot of various risks. So probably I want you to think of like what makes you like nervous the most when you think of the next marketing year. What are your habitual marketing actions? Are you happy with them, or do you want to change it? Do you have a good estimate of the break-even price? I think those are all like related to what Bruce actually presented today. And market seems declining. How will you set your new break-even price for the next season? So those are, I think, kind of good like food for thought when you are preparing for the new like growing season during this time. So thank you for your time. Let me like wrap up. And of course, just for your information, I put some like 2 more slides in the appendix for the quick snapshot on wheat side, because I like barely mentioned wheat and I feel guilty about it. So just I put them. Yeah.
It's a teaser for folks to go to the website and find those extra slides in there. If again, if our guests today, attendees, are interested in some of the same numbers for wheat, that's great. Those are included in Sin-Kee Lee's presentation slides today. For the sake of time, just gonna move on to our next topic. Sin-Kee, great assessment on supply demand, where we're at as use ratios. Next up, we're going to turn things over to Peggy.
Hello. Good morning, everyone. And thank you, Sin-Kee, for sharing that information. It's a lot to take in, but we certainly appreciate all the work that you do in pulling that together and helping us understand it. It's really useful information. So thanks for that. And I'm trying to get my slides going here. So let me just tell you that I'm going to be talking about the new program that we have at Ohio State. Bruce, I lost my PowerPoint for some reason. So can you just advance to my screen? We have a new program at Ohio State that we just began last fall, and it's called thank you, Bruce, the Ohio Farm Resolution Services Program. I'm still trying to, for some reason, I think I did it. It was my mistake. I accidentally shut down my PowerPoint. It's a new program housed in our OSU Agricultural and Resource Law program. And as I said, we just established it last fall. And we were able to do that because I received a grant from the USDA Farm Service Agency for this program. And we are going to be establishing the first ever Ohio Certified Mediation Program endorsed by USDA FSA. Now, if you're not familiar with that, which you might not be, since Ohio has never had a certified mediation program, that came out of the financial crisis of the 1980s. The USDA decided to provide state funding for mediation programs that could provide mediators to help negotiate and deal with many of those agricultural loans that, as we all know, went into default, and there were many, many problems during those years. So this was the solution, to establish these certified mediation programs that would help mediate those situations rather than going through formal litigation. And so I know, Bruce, sorry, you're trying to guess when I want you to change my slides, but I do now have my PowerPoint up, so I'll relieve you of that here in just a moment. Let me go back to this slide, and I will share from here. And now we're going backwards. So sorry. This is always a little trickier for those of you who haven't tried to do these things from multiple screens, a little trickier than you might want it to be when you have a couple of screens going. So let me try again here, Bruce, and I'll relieve you of it. Okay. See, I don't know. I think I am having a problem with my PowerPoint, so I'm going to keep you on there, Bruce.
Okay.
Something's happening on my end. Okay, so getting back to the certified mediation programs, if you could go to that slide, Bruce, 56. The reason that Ohio did not have, one more, a certified mediation program, I think there were a couple of reasons. First was because we are not one of the states that requires, it's called mandatory mediation for agricultural loan issues. And so without that required mediation, that in turn has typically resulted in less mediation of agricultural loan issues in Ohio than we see in other states that require mediation before you can go into litigation. So that's one reason that we've kind of questioned whether we should establish a program. But also a few years ago, the USDA agreed to expand the purposes for the mediation program. And so they now allow you to establish that program and cover many other additional issues beyond just mediating agricultural loans. And so good timing, Bruce. Thank you. So the issues that can be addressed and those that we will address in our mediation program are these. You can see agricultural loans. We have to do that. The USDA requires us to mediate agricultural loans when that request is made. But we also will handle compliance with farm programs and conservation programs and the National Organic Program if there are issues between the government and our operators on those programs. We can serve in that mediation role. And then look at the next three, because this is where we expect the most activity in our program. We can now use those funds and use our program services to address leasing issues, family farm transition, and farmer neighbor disputes. And any of you who are aware of our program and what we try to do in the Ag and Resource Law program know that we spend a lot of time in those three areas. So we'll be able to try to provide services between those parties that are having issues over any of those three primary areas that you see there in bold. And we're really excited to see that they added family farm transition, because that is certainly an issue we dwell in a lot, and we will be able to help families even more in those situations. And then last, the Director of Agriculture can also designate a special issue that that the director would like to see us address that would be an Ohio specific issue that our services could be helpful on. So how do we address those issues? Well, we will first of all try to provide education as much as possible. That's kind of our first level I guess strategy for trying to resolve an issue is providing the education. And we do find many times that simply having the information there, what the law is, what the law says, how it's interpreted, making sure that all sides understand that can go a long way toward resolving conflicts. Second, we will provide informal consultation services. And so especially looking at family farm transition, we will be able to meet with farm families and work a little more hands-on than we are able to do now through our workshops and presentations. In fact, David and Robert are up in Northeast Ohio today, right now, doing a family farm transition workshop we'll be able to now take that a step further. And if any families there need some additional help, we can provide that through our informal consultation. And then finally is the formal mediation that we can provide. We will be trained as mediators. We can intervene between the parties and try to help them come up with a solution to their issue through a more formal mediation process. And that is not a binding decision that would be made, but something that we try to bring the parties together and voluntarily agree to resolve or deal with that issue or problem that they may be having. And so here's our initial program staff. There will be 4 of us, and these names probably look familiar to you if you've been involved in Farm Office Live in the past, because we've all been on this program. We're all part of the Farm Office team. Robert Moore, I've asked him to direct the program, and so he will be filling in as our director. And then I'll be the educational coordinator. And then we'll also have Jeff Lewis and David Marison trained as mediators. All 4 of us will receive the formal mediator training and will become authorized to do mediations. And we hope to bring in more of our extension colleagues who are interested in serving in this role to become trained mediators. So if you or anyone you know may need our services, the easiest way to contact us is through our web page, which is on Farm Office. It's at OFRS, Ohio Farm Resolution Services, on the Farm Office web page. You can contact Robert as a director or any one of us who are mediators, and we will start that process and see what we can do to help resolve those issues that you may be experiencing. So, Bruce,
Great
I believe
overview.
that is it for me.
Great overview. And I think for the sake of time, we're gonna shift gears to Eric Romick. Eric, I hope you're ready, available, ready to go. Because we have about 15 minutes left here on the schedule. We'll loop back around to the upcoming programs at the tail end. But Eric, if you'd want to take the reins of sharing the screen, that'd be great.
All right, let's welcome Eric here. I don't think Eric's been on Farm Office Live before, but Eric, as Bruce had mentioned early on, is our energy educator, and he and I work together extensively on energy issues, and we've really kind of been thrown together, Eric, a bit on solar development, and have done a lot of work in that area together. So I asked him if he would join us and try to give us a physical snapshot of what's going on across Ohio. You may hear of solar development in your community, in your area, but I think it's useful for all of us in agriculture to step back and take a statewide view of what is happening across the state and try to understand that, as well as try to understand the potential impacts it could have on agriculture and our agricultural economy. So I've asked Eric to step in. So Eric, welcome. Are you there?
Yes, thank you and good morning. Can you see my screen
Yes,
correctly?
you did much better than me. I'm glad your PowerPoint didn't crash when you tried to
It's early.
share.
It's early on here, so don't jinx me.
Good,
So,
good.
yeah, no, I welcome the introduction, Peggy, and like you said, we've been working on this for quite some time. You know, the one thing that is interesting as we talk about energy issues is they just, you know, they start to fester and then they just kind of snowball from there, right? We could spend an entire day talking about different aspects of this, whether it's state level regulatory topics, local regulatory and approval topics, electrical interconnection processes, land use impacts, agrivoltaics, leasing. Like there's so many different aspects to utility scale solar. And what Peggy had asked me to do is just spend 15 minutes to kind of review at a high level, where are we at with current development trends? What do we see coming down the pipeline? And what are the implications to land use as it relates to agriculture? So we'll try and kind of work through those couple slides with those three questions as kind of our primary guide.
Wonderful. Sounds good. So let's tackle that first one. What does it look like right now across Ohio as we see these solar development projects coming into being?
Yeah, so to answer that first question, I really like to lean on information from the Ohio Power Siting Board. And the Ohio Power Siting Board is the regulatory body that evaluates electrical generators that are 50 megawatts or greater. So they have regulatory jurisdiction over large scale electric generation facilities, which is now including a lot of utility scale solar. So these are projects that are a little bit closer to the development process. So they're closer to kind of entering into that construction phase. As we get towards that next question, we'll be looking at a little different governing body that's looking more at electrical interconnection, but the siting board's looking at basically issuing a permit to construct, own, and operate electrical generators. And so you can see the map here is really kind of illustrating where this development's taking place. And most of that's on the western half of the state, and we'll talk a little bit more about that as we move into some of the land use impacts. But in total, as of yesterday, there were 56 projects that the siting board was evaluating. In total, just over 10,000 megawatts of generation capacity. I always pause when I say capacity when we talk about electrical markets, like there's capacity factors matter. And so when we're retiring certain generators or replacing them with others, it's important to think about that. So as a frame of reference, coal tends to operate 45 to 55% capacity factors. Natural gas will say 55 to 65% capacity factors. Nuclear is around 93% capacity factor. And solar in Ohio right now is kind of in the 22 to 25% capacity factor range. And so that's just a ratio of maximum potential generation versus actual generation. But you can see the size of these projects are rather large. So the average size is 181 megawatts. The largest project in Ohio right now is 800 megawatt solar project.
So that's
This-
quite a bit going on. And you can see from the color code, those that are in different phases, yes?
Yeah,
Of-
and hopefully this will help kind of summarize that for you. So of the 56 projects, or that 10,000 megawatt total, 9% of those are now operational. 32% are under construction. And so we're kind of entering this phase, Peggy, where, a lot of these projects have existed on paper for many years now as they've been going through the electric interconnection and the construction approval process. Now we're starting to see, boots on the ground, equipment showing up and projects that are being built. So we're kind of entering this new phase where a lot of these projects are becoming very real. As you can see, 9% operational, 32% under construction. And then we have another 30% in what's referred to as pre-construction. So these are projects that have received their certificate of public need and environmental compatibility from the Ohio Power Siting Board, and they're getting ready to kind of start construction in the near future. So whereas the rest of these, so your pre-application and projects that are pending, so they're just that. They're projects that are still under review by the Power Siting Board.
And Eric, I'm sure you remember, as I do, when we first started, there were only about 2 dots on that map
Yes.
when we first started looking at this issue, and it's certainly grown. So what can we expect next? That's what's happening now. What do you see coming down the pike on this?
Okay, so to look and answer that question, what's next? You have to kind of understand the development process a little bit. So these projects are very large, right? So typically the types of projects we're talking about are interconnecting under the transmission system. So to interconnect to the electrical transmission grid, you have to get an interconnection agreement with PJM, who's our regional transmission operator. That's good public information that you can kind of, it's almost like a crystal ball. You can look into the future a little bit, because before you can go through the power siting board process, which we just reviewed, you have to have at least started and gotten a certain amount of studies completed with your interconnection agreement. So this is a way that you can kind of see projects that are very early on in the development phase. I've broken them down into two different categories. So you see here projects that are 50 megawatts and over. So these are projects that would fall under the Ohio Power Siting Board jurisdiction. And then also projects that are under 50 megawatts, because I know you and I have both done a lot of outreach on Senate Bill 52, which was a recent piece of legislation that kind of changed the state and local dynamics of how we approve these large scale projects. And with every action, there's a reaction. And so what Senate Bill 52 did was extend a lot of decision making to the county government. But that applied only to projects that were 50 megawatts or greater. And so then the natural transition was we're starting to see more projects that are under 50 megawatts entering the development process. So what you're looking at here is a chart that is counting projects. So this is the number of projects that have entered the PJM interconnection queue. So they are starting the process to get interconnection approval to build an electric generator and tie it into the transmission system. And then, as you can see with the colors here, we've broken those down by size. So how many, of the 138 projects in 2021 that entered the PJM queue, 77 of those were projects that are under 50 megawatts, whereas 61 of those interconnection requests were projects that are 50 megawatts or greater. So to answer your question in terms of what trends do we see, I think that you can see, basically 71% of the projects over the last 3 years that have entered the queue are projects that are under 50 megawatts. So I think we're going to start to see a transition to some projects that are a little bit smaller, but still large enough that they're interconnecting into the transmission system. We can look at this a little bit closer, and what I've done here is I filtered out the projects that already showed up on that last map. So the 56 projects that are under review at the siting board, I took those out, and I wanted to see what's the status of the balance. So how close are these projects to hitting that construction phase or entering the power siting board queue? And what you can see is 76% of these projects are relatively new. So if you can kind of follow the color codes here, this is kind of a logical process. So the study, there's basically 3 studies that have to be done, and they get progressively more complex. So it starts with a simple feasibility study. The next would be a facility study. The third is your system impact study. And then the final phase in this PJM review process is an interconnection service agreement that's executed. So what this is telling us is that of the 359 projects that are out there, 76% of them are relatively new. And so this isn't necessarily a development trend that is going to slow down anytime soon.
Definitely. Looks like we're just getting started on a good number of those smaller projects. So
yeah, absolutely.
Then let's talk about what that means for agriculture and what effects you see these projects having on the agricultural land base as they go through that process, assuming they are approved and will actually come into being. So what are your thoughts on that?
Yeah, that's a good comment, because just because a project has entered the PJM interconnection queue doesn't mean it's guaranteed to be built. Don't quote me on the number, but it's between 22 and 27% historically, if you kind of look at the last 10, 15 years. 22 to 27% of those projects that have entered the queue have either withdrawn or been put on request to be put on hold for some reason or another. So certainly not all the projects that start finish, and that's something that we need to keep in mind. But what you're looking at here, I'm a visual person, and so I took those 415 projects in the PJM and did a little bit of a pivot table and tried to kind of dice them up by county to see where is this development, not only taking place as we currently see it with the Power Siting Board, but where is the planned development in the future going to take place? And so this is looking at, all of those prospective projects that could be built. And it's illustrating this by total capacity. And so, I have a different map that looks at this by number of projects, but, just note that this is a sum of multiple projects in many cases where you see the total capacity illustrated there. So there's a couple things that I think is interesting to look at when we think about why and where this development's taking place and what the impact is to agriculture. And the first thing that we need to just kind of get out of the way is, in order to build a utility scale system, developers are really looking for a couple of things. And the first thing they're looking for is an interconnection point that has available capacity for them to feed new power into that point of the transmission system. Because what that does is lower their cost, right? The more they can optimize an interconnection point, the more they can lower the overall project cost. And Ohio sits in what's referred to as the PJM interconnect, which you can see in the map there, includes roughly 13 states, 21 transmission operators, and essentially it gives you the opportunity to reach roughly 20% of the electrical consumers in the US, just over 65 million people. And so certainly access to market is one of the things that's driving a lot of this development, as you see our physical infrastructure and the connection to those markets. The other thing that that these maps help to highlight is that location matters. And so this is kind of looking at a map from USDA, Ohio's non-agricultural forested lands. And if we kind of overlay that with the same map, again, we can see where we have those heavily forested areas, there's not nearly as much development, right? And so this kind of uncovers one of the weaknesses of utility scale solar is that power density matters. And when we talk about power density, very simply, without getting into too much detail, we're looking at power output per horizontal surface area, per unit of horizontal surface area. So you can see, nuclear and natural gas very high power densities, so they can a lot of power output for a little footprint. Whereas as we start to look at utility scale solar, one of the weaknesses is it takes a lot of ground, a lot of surface area to generate this power. So that kind of leads to the last point here, is that when you look at where we see the trends moving forward with this future development, is that it is taking place in locations that are predominantly agricultural in nature. And so the topic of food versus energy is certainly one that we're hearing a lot, Peggy, and you're hearing that as much as I am as we do these programs around the state. And you can see why. And so just to kind of try and put some numbers to it. So the most recent ag census from USDA had Ohio cropland acres at 10.9 million. So this is, I labeled this total planned because of what you mentioned earlier. It's not fair to just assume that all of these projects will be built, but just to try and put some numbers to it, if they were all constructed, we'd be looking at right around 360,000 acres of land use conversion from what is predominantly agriculture into solar production. Now, the way that I came up with that number, so this 9.8, there's a lot of different numbers. People say, well, how much ground does it take for a megawatt of solar? And Department of Energy's kind of bounced around between 6.5 and 7.5 acres per megawatt for a while now. That number, they tend to be pushing to the lower end of that spectrum. But I just went off of what's actually in the development queue with the power siting board. So based on the current acreage of all the projects submitted and the total capacity, I came up with that 9.8. So I just used that as our multiplier for all of the solar that's in the PJM interconnection queue. So when you combine those two together, you're looking at right around 3.3% of Ohio's cropland as of the most recent USDA census. So certainly, some significant impacts, and then like we talked about, this is something that I don't think is going to go away anytime soon. And so this is a discussion and a debate that we'll be having for quite some time. Certainly, the one thing I've recognized in working with energy as a topic is everyone's favorite source of energy is the one that's generated somewhere else. And that's because there is no silver bullet, and they all have their strengths and weaknesses. So this is, again, not to say that this is necessarily bad, but it is a weakness that we need to consider and figure out, how do we minimize that moving forward?
True. True. And as your map illustrates there, Eric, even though it's 3.3% of Ohio cropland potentially, it's going to be much higher in some of those very ag-dominated counties that are seeing more of the development. So that's
Yeah,
the concern that
certainly.
I hear.
Certainly, as you look at Highland, Ross, Union, Madison, like there's certainly a handful of counties that impact is much greater, because like you said, some of these counties have as many as 5 to 8 projects that could be developed in those counties. And so and a lot of times they're fairly close to one another because they're looking for that same transmission interconnection line. So
So what will be the impact on agriculture in those counties? I think that's a question we need to keep our eye on and keep talking about. But for now, we're out of time. So thank you so much, Eric, for joining us. And I love those maps you create. Those are fantastic. So thanks so much for your time and for your ability to create that data for us.
Yep, absolutely. Thank you. Did you take control back, or how do I stop share here?
Bruce does have control now. Bruce is in control. Bruce, I do have just a quick question that's on Q&A. Well, there was one question about gathering the data. I'm working on a response to that person privately. But there's another question about, are these typically leased or sold land, the solar development? And the quick answer to that is they're usually leases. So with that, Bruce, back to you. Whoops, you're not on, Bruce. You need to get your audio going there.
Yes, thank you.
There
Do you
you
see
go.
the planning for the future slide?
Yes.
Okay, great. Just wanted to highlight just a couple things. Mentioned David Marison and Robert Moore are out teaching today. Those programs are called the Planning for the Future of Your Farm workshop. The in-person classes you see mentioned here, also listed on the Farm Office Live under the drop-down farm succession. Today and next week, and then in February and April, are some in-person workshops dedicated to walking families through the process of planning for the future and transitioning. If an in-person workshop does not fit the farm, there may be scattered members of the farm operation across a region. A webinar can also serve a great purpose for really still educating and getting families in the right direction. So the Zoom webinar is beginning February 5th. Those opportunities for that type of workshop is available as well. Basics of grain marketing coming up on February 8th and 9th. I can tell you that out of the 35 seats we have available, there are 3 spots left for this grain marketing workshop. Registration ends tomorrow. And so feel free to register online. And so it's go.osu.edu /grain marketing. Also coming up, there's some accounting workshops available. This is an area that I teach in using Quicken as a farm accounting tool, a workshop. So you'll see on here, there's 5 locations that we're teaching in these various counties, from Knox down to Jackson County throughout the month of February through March. And so look for opportunities to take advantage of those workshops, recommend them to colleagues and friends. There's some Outlook meetings that are coming up. We'll have an OAM article soon with these dates and locations. Some of them are next week. And so we have counties from, Muskingum, Coshocton to Washington to Defiance, all across Ohio. So looking at this schedule, there's some Outlook meetings that Sin-Kee Lee dives a little deeper in the grain market outlook for these upcoming programs. Don't forget about our Farm On financial workshop for those that are interested in taking advantage of the beginning farmer tax credit program, as well as fulfilling any requirements that a borrower may have for the USDA Farm Service Agency. The Farm On course is a certificate program that makes those that complete eligible for the couple of our programs that need that financial education. And I'll just quickly end to the very end and wrap things up for today. So our next Farm Office webinar is going to be February 16th. For those of you that are on today, we'll get an invite and encourage you and your colleagues to join us for Farm Office Live. And as advertised, we'll wrap up today with an evaluation. So if you could, as you exit the webinar today, take a few minutes on that evaluation and complete that survey for our team to make these continue to be useful for you and the agricultural industry that we all serve. So with that, Peggy, hopefully we hit a home run again today. Thanks for your help, Peggy, your expertise in your area, and thanks everybody for joining.
Thanks. Bye-bye.